Hey YouTube, how is it going today? Well, in this video I want to go over a company called Artificial Intelligence Technology Solutions. They come out with some pretty interesting news today, so I want to go over that. Plus, they are at a critical point in their chart, so we're going to go over their chart as well. After that, I want to show you some other nice looking charts that have the potential to go up, and then we're going to go over those market averages to see where the next move in the market might be going. Now, if you're new to my channel, I like to invest and trade in typically lower price stocks and talk about all other things finance related as well. If that's something that interests you, please consider subscribing so you don't miss any future trading or investing ideas. But please remember, I am not a financial advisor, so please do all of your own research before investing in any of these stocks. All right, well, I'm going to jump right into the news, and it says that Artificial Intelligence Technology Solutions today announced that its wholly owned subsidiary Robotics Assistance Devices has successfully launched its quick ship order turnaround process utilizing the company's enhanced procurement systems in a new Irvine, California manufacturing facility. They said, "We introduced the concept of quick ship back in early February, and it's been very well received by our customers and prospects in the sales funnel," said Steve Reinhardt, the president and CEO of RAD. Two clients have taken immediate advantage of the program, which has started with ROSA. These RAD solutions are deterring high-frequency security incidents the minute they are installed, so who wouldn't want to benefit from the reduction of incidents as quickly as possible, plus the added benefit of saving money right now, said Reinhardt. They also said both clients that took advantage of the Quick Ship program have already reordered, and RAD is finalizing case studies in which the clients share their experiences of immediate reduction of incidents. RAD expects to confirm a move to a large-scale manufacturing expansion within the next few weeks because demand for its high-volume entry-level devices, including ROSA and AVA, as well as requirements for Romeo production, are driving this expansion. This broad expansion into a comprehensive assembly facility, likely located in Michigan, provides central access to RAD's largest markets as well as easy access from RAD's R&D center outside of Toronto, Canada. The security industry is going through some changes, and they're happening quickly, said Mark Falmer, the COO of RAD. We need to invent new ways to support the channel and end users as they seek to reduce risk and even eliminate costs whenever they can. And when they find out about RAD solutions and what they can do, they want them right now, Falmer concluded. Now, if you're not familiar with robotics assistance devices, they are a high-tech startup that delivers robotics and artificial intelligence-based solutions that empower organizations to gain new insight, solve complex security challenges, and fuel new business ideas at reduced costs. RAD develops its advanced security robot technology from the ground up, including circuit board design and base code development. This allows RAD to have complete control over all the design elements, performance, quality, and the user's experience of all the security robots. All right, well, let's jump into the charts. This is the current daily chart of AITX, and it is a 12.5-cent stock. And this is the most requested type of stock I've been getting lately. I don't know, I guess you guys have lost your interest in some of the stocks that are priced a little higher. Oh, well, so be it. Let's dive into this one. I'm assuming that most of you are probably holding this stock. It seems like I get a lot of requests when a stock has had this deep pullback after a huge run up. And probably some of you guys are wondering if you should still hold it, if I see any signs of life from a technical perspective on this stock. Well, we can see this had the huge pullback to the 50-period simple moving average, a jump right back up, and when stocks pull back to this 50-period simple moving average, you usually get that bounce, so this is very common. When it bounces back up into the 8-period exponential moving average and starts to roll over after that bounce, that is also very common. So these are two areas that you could trade a stock quite profitably if you get used to looking for them. But then it had this nice little rollover back into the 50-period simple moving average, and it is trying to hold serve at that moving average as I'm making this video. So let's jump intraday and take a closer look at what is going on under the surface to see what might be happening next. Let's go to the 15-minute chart. Let me back it out just a little bit here. And if we look at this current move that it's having right now, it looks very similar to the previous move that it had in early February before it had that big run up. In fact, let's zoom in a little bit and take a look at that previous move and see how that one traded before it went on its run. Let me zoom in just a little bit closer so we can see it better. But it looks like right now, we're right about at this point in the chart. It started its pullback. Now it's trying to gain its footing. Now, if you were trading this stock back then, what you wanted to do is wait for it to jump above those moving averages and hold it before you entered if you were not in the stock. So let's walk it forward just a little bit. Starting to gain some more momentum. Had a nice pop up. Now what you want to do is wait for it to get past the nearest resistance. And the nearest resistance is clearly right there at about 13 cents. So if you get a pop above 13 cents and a hold above that moving average, that is your signal that the stock is probably going to be beginning its next move up. Let's walk it forward just a little bit further. Waiting for it, waiting for it. No breakout, it starts to break down, so you just kind of sit tight and wait for it a little bit more and see if it's actually going to break out. Now, if it starts to roll over like this, then you know if it breaks below these previous lows, it's probably not going to break out. It's probably just going to continue lower. But let's continue to walk it forward. It's continuing to gain some more momentum. It got that nice breakout right there, and it's holding the moving averages. So this is when I like to enter stocks intraday once they're starting to complete that pullback from a previous high. And if it holds that moving average, which it pulled back a little bit, but that's okay because it's still above that resistance area. And in fact, I like to add sometimes when it comes back and touches that resistance area. And then if it breaks back down through it, I'll take my small loss. But if it continues to hold, I just double down my position. And if it does get a run up, then I get a bigger gain. All right, let's walk it forward a little more. As we can see, it starts to gap up, and then it starts its run out to a new high. Now we're starting to get that rollover again. And once I walk it all the way to the current levels, you can see that we're right at that point in the chart where it makes that bottom, jumps up, and it's trying to carve out another bottom before that move up. You can see it's wrestling with that yellow moving average right now, just like it was back then. So that is what you're waiting for in this stock. Now, if this stock rolls over and breaks this 9-cent area, then it's probably in trouble, at least in the short term. Now, I know some of you guys have long-term conviction in this stock. You're not worried about short-term trading it. This is for the people that are interested in a short-term trade or want to know where it might be going next. If you have long-term conviction in this stock and you think it's going to be like over $1, obviously you want to be buying some more on these deep pullbacks. But if this stock can bust above 16 cents and hold it, I think it has a very strong possibility of going on its next run and taking out this old high and getting over 30 cents. So AITX is right at a crucial point in the chart, and that seems like where I get most of the questions from you guys. Let's go back to the daily chart real quick. And I will show you something else that I like to do from time to time, not very often. I wouldn't recommend doing this unless you are an experienced trader. But if you bought a stock when it started its move up and then you watch it come all the way down, and this is if you're trading the stock, what you can do, what I like to do is add at these major moving averages and then sell out once it jumps up to the 8-period exponential moving average so I can get out of this stock. Now, I'm going to show you a real-world example that I just did the other day. Let me jump over to it. I did this in Senseonics Holdings. I didn't do this in my account, but in another account that I managed for somebody else. What I did was I bought Senseonics Holding at $2.55. It had this massive run up. I was up, God, I want to say about $1,100, maybe $1,200 at the highest point. It wasn't a super big position, but what happened was we had this massive sell-off, and I watched all of those gains disappear. I doubled down right here at about $2 and I think 54 cents, almost the exact same price of where I bought it at because I was expecting a bounce right away. It crashed through that moving average. I added again at about $2.05, so I tripled down because I thought a bounce would be coming pretty soon because the sell-off had been so steep. Again, I don't recommend this unless you're experienced, because if you do this too often, sooner or later, a couple of them are just going to keep going down and you're going to blow out your account. But anyway, I waited for the bounce up and I sold right around $3 for a net gain of about $900. So the gain was almost the same as this huge move up, but I did triple down actually on this one to make the money back because I knew I had a pretty good suspicion that we were going to be getting a bounce. So that's one way you can dig yourself out of a position that's had a massive pullback. You know, if you're just looking to get out of it at a gain and not take that huge loss. Now again, super risky. I would recommend watching a stock several times before you do this with real money. But I've been trading for almost 20 years, actually a little over 20 years now. So I do this every once in a while, not very often, but I just wanted to show you guys that's how you can dig yourself out of a position that has had a huge pullback like this. All right, well, let's jump into some other nice looking charts. What I am noticing in the market right now is that there's starting to be another rotation back into some of these oil and gas and energy stocks. It looked like the last couple of days that momentum had pulled out of these energy type stocks and they were jumping back into those technology stocks because of the bounce that was going on. And it looks like they're starting to rotate back in today because it looks like the NASDAQ is getting a little weak, but I'll get into that later. I was looking at this stock yesterday, but I'm not taking any new positions. So that's one thing I do want to point out. I'm not taking any new positions right now. I want to wait till the market tips its hand a little bit more and shows me some really clear direction before I start putting a lot more money to work. Right now, I'm just kind of doing day trades to try to earn a little bit here and there. I scalped a little bit on AMC earlier this morning, and that's the only trade that I've taken today. But the first one I want to show you is MMLP. This one is in the oil and gas sector as well, and I was looking at this one yesterday, and it looks like today it's having another big move up. It's starting to break out as I'm recording this video, so just another oil and gas stock that's making a nice rounded bottom and starting to get that breakout. So if you guys want to take some new positions, MMLP is looking super good right now. Next one I want to show you is OSG. OSG is coming out of this base. Volume is starting to come in, and it looks like it is about to break out. This is not a very heavily traded stock, but this is also in the oil and gas sector. There's only 271,000 shares traded at the moment. Normally, a big day for it is right around 1 million shares, so it's not super thinly traded, but it's not robustly traded either. But OSG is definitely one worth watching, especially if we get a breakout above this level right around $2.60. I think it could be off to the races because this thing has had a nice long base for over 2 years. So OSG is definitely one worth watching. And if you like ones with lower floats, OSG is looking pretty good. Next one I want to show you is BKEP. BKEP, Blue Knight Energy Partners, oil and gas again, is starting to break out already. And this one is a thinly traded stock as well. It's got about 500,000 shares traded right now. So it's a little bit more thinly traded than most stocks, but it is starting to break out. You know, it's not a super huge mover, but that's not saying that it can't start screaming higher really fast because it is not superly heavy traded. But BKEP is definitely one worth buying if it pulls back a little bit extended right now. So if it pulls back into this support level right around $2.48, between $2.45 and $2.50, that would be a nice area to enter BKEP. Next one I want to show you is DSX.
DSX is a shipping company, so the shipping companies are doing doing good as well. And this one is actually starting to break out from the pullback. This was a very nice entry point right at the 50-period simple moving average, and you are getting follow through off of it. So DSX is doing well, and a lot of these shipping and port stocks are doing super well, just like the oil stocks. Another one I want to show you is NNA. This is another maritime stock. This actually says oil and gas midstream, but it is Noveus Maritime Acquisition Corporation. Anyway, this stock is starting to come out of a rounded bottom, and if it can get above this yellow line, this 200-period simple moving average, I think it has a strong possibility of going on a run. So it's right at the beginning stages. I wouldn't call it a buy just yet. If it gets above those moving averages and holds it like I like to see, I think NNA is making a very constructive pattern, so it could definitely go on a run. Next one I want to show you is Transocean. This was one of my favorite stocks way back in the day. I used to trade this thing all the time. Let me get this support line out of here. I drew that earlier. I said if it broke that resistance area and that became support, it was probably going to be off to the races, and that looks like what's happening today, as it is starting to get a breakout of $4.35. It's going on some pretty good volume. It's already above the average daily volume. So Transocean is doing super good. Next one I want to show you is ASC. This is another shipping and ports company, and they are blasting out to a new high. See that previous stock that I showed you, NNA? It was trading right about here. I was waiting for it to, I mentioned that I would like to see it get above those moving averages, hold, and then get a breakout. So this is exactly what you would want to see in NNA before you bought it. I like to see it break above these moving averages and hold, just because it's just clearing all that resistance. So it gives it a stronger possibility of moving higher and less obstacles in the way. All right, guys, well, let's jump into those market averages and see what could be happening next in the market. This is the QQQ, which of course is the ETF for the NASDAQ. If we zoom in a little bit closer, we can see the NASDAQ moved almost up to the purple line, which is the 21-period exponential moving average, but it is starting to pull back. Now, once you get a bounce into these moving averages, usually a rollover will come next. Hopefully that doesn't happen, because I am still pretty long the stock market, and I would rather see it go up than roll over. I think that it's probably going to be higher sooner or later, just because the other two market averages are doing better than the NASDAQ. There could be one more rollover, but I think the rotation out of tech has just about run its course. It looked like a lot of people jumped in and bought some of those beaten down tech stocks. They were sensing some value. So I think the bottom in tech stocks should be pretty close. Let's go intraday right now. Let's go to the 15-minute chart, back it out a little bit. You can see we had, I wouldn't call this a double bottom. I like the double bottoms where the second low goes below the previous low. So I actually wouldn't call this thing a double bottom, but either way, we're getting a nice bounce off of this bottoming pattern. And if it can hold above this yellow line, which is the 200-period simple moving average, and then bust above right around $3 or 316 on the QQQ, I think we are going to be in for another nice move up. All right, let's take a look at the spider, and the spider is breaking through that megaphone pattern that I drew on the SPY several days ago. We can see it broke out of that previously, and it looked like we are starting to bust out of this one right now. So the spider is looking pretty bullish. If we take a look at the daily chart, we can see it is breaking out above that trend line. It's making a little bit of a doji pattern, so this is very important. If it holds this type of pattern for the whole day, usually a doji pattern will signal a strong move one way or the other. If you get a doji and then say you get a gap up, chances are it's going to be a pretty strong move up. If you get a gap down, and chances are it's probably going to be a strong move down. So this is going to be very interesting to watch on the S&P 500. Let's take a look at the Dow Jones, which is the diamonds, of course, and the diamonds is just busting out to a new high. So this is why I think the market is probably not going to roll over. I think we just got a little bit of rotation going on, and it seems like it's just about over. And let's look at the diamonds on the hourly chart. And you can see how strong this breakout is right now. It had two tests right around the support that it had right around 318, and now it's busting out to a new high. So I do think that the Dow Jones stocks are going to lead us stronger, and it's going to pull everything up rather than the NASDAQ pulling us down. This remains to be seen if it happens, but that is the feeling that I am getting. If you guys are seeing something different on the charts, by all means, let me know down there in the comments, because I am not too proud to take another look at the markets, especially if I'm missing something. So I would appreciate it if you guys do see something, if you let me know. All right, guys, well, that's all I have for this video, so I'm going to end it right there. But if you have any questions about any of these stocks, or if you have any other stocks you want me to take a look at, please leave them down there in the comment section. I will get to them as soon as I can. If you enjoyed the video, please hit the like button for the YouTube algorithm and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, guys, and until next time, take care.